What if I told you that every major financial crisis in history had the same warning signs? The Great Depression, the 2008 crash, even the dot-com bubble, every single one followed a predictable pattern. And yet, time after time, people ignored the signals. But you don't have to. This is what always happens before a financial crisis. Section 1. Too much debt and easy money. Every financial crisis starts with too much debt. Cheap money floods the system, banks hand out loans like candy, interest rates stay low, and people borrow like there's no tomorrow. This creates artificial wealth, pushing markets higher and giving people a false sense of security. But here's the problem: debt is only good until people can't pay it back. Historical footage of 2008 financial crisis, 1929 stock market crash. When debt levels get too high, it takes just one trigger to send the whole system crashing down. The mortgage bubble in 2008. Overleveraged stocks in 1929. The dot-com startups burning cash in the early 2000s. It always starts the same way. Section 2. Asset bubbles and irrational exuberance. The next sign. Asset bubbles. You see this when prices skyrocket beyond all logic. Stocks, real estate, even cryptocurrency, everything goes up, and people think it will never stop. Remember in 2006 when everyone thought house prices could only go up? Or the 1990s when tech stocks were the future, no matter the profit? No, it's never different. When people start believing that the rules of economics no longer apply, a crash is coming. Section 3. Rising interest rates and the tipping point. The next step is when central banks try to slow things down. The Federal Reserve raises interest rates, making borrowing more expensive. Why? Because when inflation gets out of control, they have no choice but to cool down the economy. But here's the catch: rising rates pop the bubble. Suddenly, people can't afford their debts. Companies that thrived on cheap money start collapsing. Homeowners default on their mortgages. Investors panic. The domino effect begins. Section 4. Panic and market crash. At this point, fear takes over. The same people who were buying at all-time highs rush to sell, flooding the market with assets no one wants to buy. Stock values plummet, retirement funds shrink overnight, and investors face massive losses. Banks tighten lending, making it harder for businesses and individuals to stay afloat. Companies respond by cutting costs. Layoffs begin, wages stagnate, and consumer confidence collapses. Governments step in with emergency measures, including bailouts and stimulus packages, but by the time these actions take effect, millions have already suffered financial ruin. The panic spreads worldwide, impacting economies across the globe. The domino effect is unstoppable, and recovery is slow and painful. Section 5. History repeats itself. The craziest part. This cycle happens over and over again, yet people never seem to learn. Financial history is filled with the same mistakes: excessive risk-taking, speculation, and the belief that this time is different. But it never is. The same pattern plays out, whether it's the 1929 crash, the 2008 housing collapse, or any other economic downturn in history. The lesson here is simple: those who recognize these warning signs early have a chance to protect themselves. Smart investors hedge their risks, diversify assets, and avoid getting swept up in the hype. Staying informed and financially prepared is the only way to avoid being caught off guard when the next inevitable crisis arrives. Because, make no mistake, it will. Like Warren Buffett said, be fearful when others are greedy, and greedy when others are fearful. The key to surviving a financial crisis isn't timing the market, it's understanding the warning signs before it's too late. So, now you know what always happens before a financial crisis. The question is, what are you going to do about it? If you found this video valuable, hit that like button and subscribe for more insights on finance, investing, and the economy. And let me know in the comments, do you think we're heading toward another financial crisis? Let's discuss.